Good afternoon and welcome to the marketplace. Coming up in this bulletin, some major oil marketing firms keep prices unchanged at the pumps despite industry data projecting a marginal increase over the weekend. But how is competition influencing this development, and should we be celebrating? We will be engaging the Executive Secretary of the Chamber of Petroleum Consumers.
Hi, great people of Ghana, and Nigerian Prof, bringing you political news in our channel, Ghanatube. Series of happenings, series of things has actually been coming out one by one in Ghana. A lot of concentrations, a lot of projects, a lot of appointments, and a lot of things that President John Dramani has actually submitted himself to doing for the people of Ghana. And as usual, our channel is always committed to bringing you all this news your way. Please wait.
Also in this bulletin, the World Bank projects some exciting times for Ghana's economy, with growth picking up from next year and inflation slowing to single digits. Also, government fails to meet Treasury Bills target for second week running as interest rates were mixed on the yield curve. We have this and more coming up in this bulletin. My name is Winston Taki. Now let's bring you updated how the Ghana cedi is performing against major global currencies. This is the marketplace now to our first business story. Some of the major oil marketing firms have kept their prices unchanged at the pumps, at least for now. This is despite an industry data projecting that prices will go up marginally per litre over the weekend. George Biafe has the rest of the story.
The price of petrol and LPG should have gone up by almost 3% per litre and kilogram, while diesel was supposed to have been reduced marginally, but just under 1% on Saturday. However, it appears most of the major oil marketing firms are yet to review their prices, whilst some have told Joy Business that they will not increase their prices, at least for now. Others have revealed that prices would not be adjusted. The decision of these firms has been influenced by what some describe as competition. There are some interesting developments on the market. As market leader Star Oil has kept prices unchanged, it has reversed some of the discounted prices service stations across the country that was selling a litre of petrol at 11 Ghana cedis, 95 pesos. This should mean that all service stations are selling a litre of petrol at 11 Ghana cedis, 97 pesos, whilst diesel is going for 13 Ghana cedis, 45 pesos. However, some service stations of Allied has dropped the price of petrol by 5 pesos and is now going for 11 Ghana cedis, 60 pesos.
Now joining us to discuss this is the Executive Secretary of the Chamber of Petroleum Consumers, Duncan Amoah, who is joining us on Zoom. Welcome to the marketplace. Now, are you surprised by this development that most of these OMCs are not reviewing their prices despite data suggesting a hike?
Thank you. Good afternoon, Winston. Good afternoon to your viewers. Indeed, our market numbers did indicate a similar thing to what Joy did put out. Petrol, LPG should have seen some upward adjustment between 1% and 2%. Diesel could have declined by 1%. What happens often within industry is that the cost of changing your display boards or electronic boards or the pump every now and then is in itself some amount of work and money. And so where you find the difference is not that significant, what the OMCs often do is what they call cross pricing or cross-selling. Instead of making a gain of 5 pesos here and adjusting 5 pesos down on the other one, they would rather maintain prices so that it evens off at some point. And so this is one of the benefits you get from a deregulated market where the industry itself, instead of getting the disruptions that we are getting every 2 weeks where we are adjusting prices upwards, downwards, when the variations or the difference is not that significant, this is what you often would see within industry. So for us, it's not surprising. It's happened a lot of times when the prices for both products are not too different. One goes up, one comes down. So if you left the two of them at the levels that you still have them, you are neither making losses nor making gains. So you are still able to stay within competition. And that for us is very fair. The market has been fair on this one.
You mentioned fairness, bringing about deregulation, and also we've seen the major players, some of them maintaining, some making changes. How has the competition necessitated that stance of stabilizing the prices?
For a deregulated market, you would expect some of these trappings or fruits to be manifested. You do not expect, somebody to outprice their competitors. And so often what you get is that even when prices would converge around a particular figure, you would then see some of the OMCs, particularly the competitors, those within the tier 1, tier 2, tier 3, you would see that if they are competitors and their stations proximate, you would realize instead of probably charging 11 Ghana cedi a liter, somebody will want to do 10.98 or something. We'll just do some 2 pesos down, 5 pesos, 10 pesos down, in order that the numbers could attract the rational consumer who is looking for where he will get a bit more for the same money or more for less. So these numbers are a result of what I indicated, a deregulated market, which now thrives on market efficiency, and then again, you being consumer sensitive as far as pricing is concerned. And so I'm not surprised that even though some should have gone up and gone down on the products, they are rather deciding to ease down a few pesos on some of the products. It's just to a market strategy to drive, volumes, so that they are able to make whatever revenues or returns that they anticipate for the window.
Currently, the Ghana cedi has been under some pressure just recently. How does that reflect on the pricing and also the consumer subsequently?
What we recorded for the currency variation is a little under 0.5%. So it's lost some ground, but not that significant to affect prices significantly. One of the products that rather did see some adjustment significantly would be the RFO, which the industries would use. But for the white products, LPG, the variation as far as the cedi's impact was not that significant for this window, although the industry that was actually doing about 10.45 is currently doing about 10.7. You realize that the variation is not that significant to cause any major changes in prices. So, Winston, it is fair and well. We are happy that the market has responded this way. To end, let me back the calls by the public transport operators for the Pokwase in Sawam stretch. I know of efforts being made to block those roads on Thursday. I think that we should see the contractors back to site. It is not helping. And as a petroleum chamber that has a lot of dealing with these drivers, I think that they have a good and a just cause. We should heed, we should try to ameliorate the suffering of the road users along that stretch, because they are losing money, they are losing precious time, and they are losing in terms of fuel. That a stretch that should have done 10-20 minutes, you are doing 2 hours on.
Okay.
It doesn't bode well for all of us, Winston. So that's just an aside. But for the industry, like I indicated, the prices are fair and well.
All right. We've been reliably informed that the contractors are back on the road, but we're hoping that their work continues subsequently. Finally, may I get your projection for the sector in the next pricing window?
Well, that will be difficult to tell for now. The window began just a few days gone.
But your outlook, basically your outlook for the sector, if it does, that will thrive in this case.
Well, you see, the city would play a significant role because we are still importing. We are bringing in products by the day. If the city was to be stable, the international outlook also looks pretty fair. It is not that volatile any longer. OPEC Plus has equally decided to sustain output. And once that happens, what you are getting is that.
Great. Unfortunately, interruption there. And Duncan Omar was here tracing the projection for the petroleum sector, which he was highlighting OPEC Plus, probably geopolitical dimensions, can play a key role in the next pricing window. In other development, government failed to meet its Treasury Bills target for the second week running. That's according to the auction result by the Bank of Ghana. Interest rates were, however, mixed on the yield curve. Here's more in this report.
The government T-bills were undersubscribed by nearly 30%. The Treasury received a little over 3 billion Ghana cedis compared to a target of 4.24 billion Ghana cedis. The majority of the bids came from the 91-day bill. A little over 2 billion Ghana cedis, representing 68.4% of the bids, were tendered for the 3-month-day bill. The uptake was 2.02 billion Ghana cedis. For the 182-day bill, 678.18 million Ghana cedis of the bids were tendered. The bids accepted were estimated to the tune of 537.69 million Ghana cedis. Also, 272.58 million Ghana cedis were tendered for the 364-day bill. About 167 million Ghana cedis were accepted. Meanwhile, the yield on the 91-day bill went down by 7 basis points to 10.13%. VAT of the 182-day bill, however, went up to 12.23% from 11.54% the previous week. The yield on the 364-day bill nonetheless decreased by 2 basis points to 13.08%.
Now, the World Bank is projecting some exciting times for Ghana's economy from next year. This was captured in the bank's latest economic update report. George Viafi has been going through the report and document and joins me with more here in studio. George, what has the bank been talking about, and should we as a country be excited?
So before even I get to those fine details, you know, the bank, as part of their report that they put together for member countries, they actually do an assessment of how the economy is faring. And for Ghana, the bank put together this economic update report just to assess how Ghana is faring, what are the threats to the economy, what needs to be done, and all those things. And this is captured in its latest economic update report. So if you go through the report, it said a lot of things about the economy.
Yes.
Well, it talks about first looking at growth rate expected to average around 5% from 2026. You look at how much you're doing right now in terms of growth. And if you're going to do on the average 5%, that is quite strong going into next year. Also talk about reducing inflation to hit single digit from next year as well, towards the Bank of Ghana's band of 6 to 8% or even 10% as well. Also, public debt stock is going to decline going forward, actually, to reach those sustainable levels by close of 2027, 2020. And that's quite strong for an economy.
Exactly.
Looking at where we were coming from, actually.
From the DDEP terrain.
The restructuring and all those things. So, and also improve credit ratings. Now, if you thought that what we had right now, or what we have right now, is good, now the bank thinks that going forward, we should be ready for some exciting times. So it appears that the work that the economy managers did over the years, we will see those real returns going forward into 2026. But there's a caveat here. The bank is saying that, hold on. Even though you're going to achieve some of these things, these are some of the things you need to do.
And will this happen irrespective of whether the current government does something or not?
No. So look at the current program that you are implementing to raise more revenue and cut down on expenditure. The fiscal consolidation program, you need to press ahead with that one. Also, government expenditure as well. How do you make sure that you balance your expenditure with revenue? Also, the current debt restructuring program, even though it's about 90% complete, you have the commercial external creditors. The government is yet to finalize on that one. And if you don't do that also well, that could affect this projection that they've put together for the Ghanaian economy. And also revenue mobilization.
for the World Bank, they think that we are still not doing enough when it comes to raising revenue to match the size of the economy and the economic activity taking place in the economy as well. So they think that we should take a second look at the exemptions and raise more revenue to match what we are doing in the country. So if you do all these things, then be assured of inflation going down, be assured of the economy expanding, be assured of revenue or debt levels going down significantly to that sustainable levels that we've been looking forward to.
These sounds like home or external solutions for a homegrown economy. And we believe this homework, if government decides to comply with, we will certainly be seeing these projections you just made mention of. Thank you so very much, George, for bringing out this insightful analysis. We appreciate your analysis always here on the marketplace. Now, let's go on Zoom and speak to economist Professor Patrick Isumin on these development. Now, Prof, what do you make of all these good things that the World Bank has been saying about Ghana's economy from next year?
Good afternoon and good afternoon to viewers, and thanks for having me. Well, I think it's good to hear, but essentially, so I think it's a projection that seems like something new in terms of how the economy has been in the last 12 months, not exactly something new. But I think we have to put it in context. The average growth rate of 5% going forward has to be put in a proper context, because 2024, we grew 5.7. And based on the first quarter numbers, we are already projected to do something around the same number or higher. So actually, projecting 5% in the medium term is not something extremely new. And it's not something that we should be super excited about. I think that's what we need to. Even though it will be higher than our average in the last 5 years, I don't think that if you look at where we have been in 2024 and where we have started 2025, it's not like it's something super exciting. The other thing is that, the report focuses on jobs. And I think this is where we should be concerned with. If we are going to grow the same way, that kind of jobless growth we've seen in the last couple of decades, then, it's a higher number that's not necessarily bringing the benefits. I think the problem is that we focus too much on the macros and forget that at the end of the day, growth has to benefit human beings, and we have to create jobs. And I think this is where we need to, perhaps it's not as exciting. I'm sorry to say that it's not as exciting as maybe.
All right, Prof, do you also think all these things will indeed come to pass? Just as you said, it's not actually exciting, but because they are based on some tough conditions like pressing ahead the fiscal consolidation and debt restructuring.
I think the debt restructuring looks like the easier one to achieve. It appears that we are much closer. We are almost 95% through. It's just a few paperwork that has to be done. So I think that one will be much easier to do. The harder part is expanding the revenue envelope as well as the restraint on expenditure. Now, in 2025, the expenditure management looked very strong. We've seen that the budget that the government put up, and in the mid-year budget, we've seen that through the first half of the year, we've been on track. But, these were strong expenditure management measures that you are not sure that you'll be able to repeat those kind of measures going forward. So I think it comes down to the revenue side.
All right,
the main plank that this government has done, it says it's going to review the VAT. We are waiting to see, and I think it's how much or the VAT reforms will bring is really what's going to determine whether we are going to expand the revenue envelope. And don't forget the risk that they also mentioned. Much of the strengthening of the CD and much of the good news that we've seen this year is because a lot of things are working in our favor. Our commodities are doing very well. And those are not things that we directly control. And if conditions change, it could reverse some of the progress. So I think the risk is there. So, we have to be mindful and watchful.
Great, Prof. Now, before you go, Prof, let's turn our attention to the Treasury Bills market, because government is still struggling to meet its target. What could possibly be the reason?
Well, my sense is that the rates have come down so low that it appears that people are beginning to look at other alternative forms of investment. if you look at where we started the year, rates around upper 20s. Now we've gone down below 15 or so. So I think it's, in some sense, it's good. It's good for the economy. Maybe it's good that government is not getting the money, but if the money is finding its way into more banks and private sector lending, I think that's good news.
Great,
but
Prof.
my sense is that the fact that the yields have come down probably has a lot to do with it.
Thank you very much, Prof, for your insight here on the marketplace. We appreciate your time. Always having you here for more insightful conversation. Now, moving on, the share prices of MTN Ghana and Enterprise Ghana are expected to rise further this week on the Ghana Stock Exchange due to persistent investor demand. Grace Mayanon of Data Bank Research explains why these stocks are the most sought after on the capital market.
Please do well to like, comment, follow, put on the notification bell so you get all our news one by one. Thanks, my people.